Their traditional broker is dead, and it appears that prop firms are taking over. But guess what? There is a catch. Prop firms have extremely strict risk management rules in place that are basically designed so that you don't pass and they don't have to fund you. But guess what? I own a prop firm, and I in fact do want to fund you. I want to fund you so bad that I personally took our own challenges and I passed them. And so in today's video, I'm going to show you exactly how I did it so that you can stop losing money, stop blowing up your accounts, and start becoming a profitable trader. So what we're going to do today is get in the lab and show you guys exactly how I did it. But first and foremost, let's just talk about what a traditional broker is versus a prop firm and why is this becoming so popular to traders all over the world. So the first major difference is this. Let's say you have $10,000 in your bank account right now, and that's what you've decided, I'm gonna allocate this to my trading career. So at a traditional broker, you would probably be like, I wanna make as much money as possible. So let's deposit the entire $10,000 on this broker. But what did you just do? You expose yourself to 100% risk of all your money. And when you first start trading, that is when you're most vulnerable, and that is when it is the easiest to blow up your account and lose everything. Now, prop firms work a little bit different, and this is why they're becoming so popular. In order to get access to a lot of money to trade with, you would only have to risk a fraction of that. Let's say you also had $10,000, and in this case, you wanted to get access to $100,000 in trading. At Hydra Funding, our single phase plan only costs $629. Now you are risking just 6.2% of your $10,000 to begin the learning process of trading. You're not actually going to be trading live money yet, because that is the worst thing you could do, is deposit your entire bag at a traditional broker and start risking everything, because there's a 98% chance that you're going to blow up your account and lose it all. Now with the traditional broker, you kind of just have one type of account, but with prop firms, there's actually two different types of accounts. There's a single phase and a two phase. A single phase is what I use, which is designed for swing traders, for people who are holding overnight, want to hold throughout the weekend, want to hold through news, and can use a little bit lower leverage because we're actually holding for weeks to potential months on any sort of position, or if it's just a couple of days. Now the two phase is a little bit different because this is designed for scalpers and day traders who want to get in and get out for rapid movements and take quick profits. The risk parameters are a little bit different on how to pass. On a single phase, which I'm going to show in this example, you have to earn a 10% profit without first going into a 6% loss or a 5% loss in a single day. Now the two-phase program, you have to earn a little bit more profit, but you also have a bigger drawdown. First is you have to earn a 6% profit target without going into a 10% drawdown or a 5% loss in a day. Then there's a second phase after that, which is a 9% profit without going into a 10% drawdown or a 5% loss in a day. So it's a little bit more difficult to pass a two phase, but you do get higher leverage to allow yourself to make big gains in a single day, whereas a single phase, a little bit less risk, a little bit more relaxed, and that's the way I like to trade. And you only have to earn a 10% profit target. And now here is a major difference from a traditional broker versus a prop firm. At a traditional broker, you deposit money there, and guess what? You're just in the Wild West. You're ready to do whatever you want. There's no rules. You can literally just deposit money and start trading. Let me just give you an analogy here. Let's say you're at an NBA basketball game, okay? On the court, there's 10 people, 5 on each side. Let's say that's Bulls versus the Bears. In the crowd, there's tens of thousands of people. The ratio here is probably about 2% of the people at this game are on the court. About 98% are in the crowd, right? The only people who are qualified and good enough to make any money or actually play this game are those 10 people on the court. So to think that you're going to start from ground zero, walk from the stands onto this basketball court and compete with those 10 people is absolutely ludicrous. And this is what it's like when you enter the market from the standpoint of a traditional broker. There's no rules. There's nothing telling you you can and can't do anything. There's no training. There's absolutely nothing. You're on the court competing with professionals, and I promise you, you're not going to make any money. Now, at a prop firm, while these strict risk management rules seem like they're there to limit you, what they're actually doing is building good habits as a trader so you can find long-term success. And this is the game-changing difference in prop firms versus a traditional broker. Yes, you can set those kind of rules for yourself on a traditional broker, but are you going to follow them, or is greed and fear going to overtake your ability to follow your own rationale and follow your own mind because you lack discipline? At a prop firm, Discipline is thrown out the window because those rules are hard set in place and you are out if you break the rules. And last but not least, let's just talk about some home run swing for the fence trading or flipping your account trading. I'm sure you've seen other YouTube videos out there where people are talking about turning 50 bucks into $1 million or some sort of bullshit like that. Okay, but let's just talk about the reality of trying to do this long term. Okay, let's say again, you have $10,000, you deposit it on a traditional broker. In order to earn $10,000, you have to earn 100% on that account, which means you have to flip that account, which is extremely difficult to do. And it's going to take you a very long time unless you're doing some crazy strategy and making huge risky bets that if you have one wrong trade can turn into a death spiral and lose, if you lose 30% of your account, then all of a sudden you're in the head and you can't recover from that. That's what happens with most traders out there. That's what I've seen time and time again over my last 20 years of trading. Now, with a prop firm account, let's say $100,000 account that you can get access to for $629, in order to make that same $10,000 profit, which equates to 100% gain on a traditional broker, if you deposit $10,000, you would now only have to earn 10% profit on that account due to the fact that you're trading with higher capital, $100,000. And you can even get access to $1 million in capital, okay? Of which I'm taking 2 $1 million account challenges now after I pass the $100,000 account, which will be in a later video. So hit subscribe, of course, to follow up when I do that. But this is a huge game changer. Trying to go for 100% gain on an account is extremely risky and extremely dangerous and is probably going to result in you making some extremely irrational decisions that result in your failure. But if you have access to $100,000 in capital, this allows you to relax. It allows you to use proper risk management rules, allows you to get rich slower, but at a higher rate of speed due to the fact that you have access to higher capital. But it allows you to slow down and actually start thinking rationally when you're approaching your trading, gets you better at sleep at night because you can go to bed with a live trade open, knowing that if it's a failure, that you're not going to blow up your account because you're trying to go for that 100% gain. Rather, you're trying to go for 10%. So every trader needs these 3 basic things. That's 1, a trading strategy that can identify high probability setups. Number 2 is you need a risk management system that you can apply on top of that trading strategy so you don't blow up your account and actually make good bets. And 3, you just need some sort of broker that suits you, that allows you to trade the assets you want to trade. At Hydra Funding, we have a bunch of different assets: crypto, Forex, stocks, futures, commodities, indices, whatever you really want, you can trade, which is nice. And for this example, for me passing the 100K challenge account, I mostly traded US stock index futures such as the S&P 500, NASDAQ, Japanese 225 index, as well as I've traded some gold, Euro USD, and what have you. So a little bit of a combination of everything, which is nice to be able to not be limited by what market you can trade. You just shift to what market is creating the best high probability setup based on your trading strategy. So let's get into what the kind of trading strategy that I used for this particular challenge, which was quite simple, just using something I call trap trading and something I call channel trading, which is very basic structure. Now, in order to kind of understand how these principles work when you're looking at this kind of strategy and just any sort of trading strategy at all, you need to understand what market cycles are. And that's essentially just looking at any chart and understanding where the supply and resistance or supply and demand zones are in that level, and understanding that you don't ever enter a trade unless you're in a high probability zone, never in a gray zone. So now we have resistance, resistance, support, support. So based on this chart, the gray area would be in levels which are no man's land, that you would never want to enter any sort of trade. Because if you are trading in any of these gray zones, you're FOMO chasing after the opportunity has already come and now your risk reward is totally So if you're wanting to sell out of this position or get short on a position, you wait for it to be in a high probability zone of resistance. And if you want to buy into this position, you wait for it to be in a proper cycle area down near a support zone. So that's what you need to understand about market cycles. And that basically comes down to having the discipline to sitting on your hands most of the time in trading and never trading in the actual gray zone of market. So that is what we call the market cycles that you need to understand. The next thing that I like to trade and I love to trade is basically just understanding how traps work and how to trade them. There's wolves in the market, which are about 2% of the profitable traders out there, and there are sheep in the market, which are about 98% of losing traders. When it comes to a trap, about 98% of traders up and end up losing on the trade, or about 2% manipulate this situation to become profitable on this trade. Now, in this scenario that we have in front of us right here, basically, these are high probability zones in this level. But at this, once price gets back up towards that previous resistance peak here, things become emotional and price volatility increases, which enables it to become an area where it's easy to get stopped out. Whereas most traders look at a breakout above previous resistance, now they're thinking, okay, we're shooting to all-time highs, we broke out, let's fucking go, WAGMI, HODL, yes, let's go. Which is in fact, most of the time, the exact opposite case happens where price briefly breaks out above there. People who were short here previously stop out when this thing spikes above and they panic sell. Also, people FOMO buy in, thinking, oh, we're finally at all-time highs, let's fucking buy now because they talked about it on the news or some bullshit, when in fact, it quickly reverses down, closes below that level, and now this is what we call a bull trap. Everyone who bought above this level right here are now going to eventually panic sell on the way down and create a huge slingshot movement all the way back down to the downside, creating new lows, and it creates a huge panic sell-off. I always anticipate a breakout above previous resistance for me to enter in and get short for the dump to the downside. Now, if I don't anticipate that, I might enter down here, which most noobs enter if they're going to enter short on this, and then they stop out here, get trapped, and then dumps, and they wonder what the hell just happened, because what their theory was that it was a good short. And in theory, it was a good short. They just stopped out before the actual move came. So that is the kind of trap that I love to trade. The exact opposite happens, and the same thing happens, what we call a bear trap, where price makes a peak low, creating a support level. Price comes back down. Rather than bouncing right off that same level, it actually breaks down below. All the bears are panicking, saying, oh my God, we're going to new lows, when in fact it only briefly dips down below there. Anyone who is long here stops out, panics, freaks the frick out. But the wolves are actually buying this trap here, and you don't know if it's going to happen. Potentially, it might just flag down here and actually break down and continue lower. That is a very possible scenario as well that you have to prepare for. But if price breaks below it and then eventually closes back above it in a very short amount of time, it's likely going to be a bear trap, and you're going to see a huge slingshot to the upside of one, people who got short down here, all the idiot noobs shorting on the breakdown, then they're all going to have to cover their positions, as well as a lot of people start FOMO buying into that, and that creates a huge squeeze to the upside, and that's what we call a bear trap that you can buy into, and I love trading that pattern. If we look at channel trading, guys, this is basically just a similar setup, but on a horizontal or on a declining or ascending bull trend or bear trend. And once we have two peaks formed up here, we now have a resistance area, and then the next one that comes up here is likely going to be an area that you can short into for the dump to the downside. On the opposite of that, a breakdown below this and into the descending support, what also does that create? It creates a trap down here below that resistance where everybody freaks out because it just dipped to new lows. But the reality is we're in a channel, which that can also be a buy signal for the push up towards the next actual level here that you can short into for the dump. So there's multiple buy signals and short signals within a channel based on a trap here, as well as a retest of resistance here. But sometimes you also have to anticipate that it might actually come up briefly over this resistance level before coming back down. So you have to anticipate that. Same thing on the opposite side of an ascending trend, that same situation pans out. And you also have to understand the cycles that are involved in this on basically any pattern out here is never trade in a gray zone, never enter into the gray zone. Only wait for those particular opportunities at these levels and always anticipate the trap that could potentially go higher than what the actual resistance or trend line that everybody's looking at is actually gonna do, because everybody's looking at the same thing for the most part. The only thing that's different is how people interpret what could be happening on these actual squiggly lines that we're all drawing here, okay? So all we're trying to do as traders is steal money from people potentially like you who are watching this video who don't know what the hell is going on, and you continually lose money because you're like, what the technical analysis doesn't work. None of this shit works. I'm drawing all these lines correctly, but none of it works. It always spikes in my general direction and then goes too high, a lot higher than I thought it was going to go, a lot lower than I thought it was going to go, and then goes in the direction that I want it to go. And that's because you don't understand trap trading and don't understand that you have to anticipate that, and how do you actually manipulate that situation so where you can actually trade it. One way to do it is what I call grid trading. Most people buy once and sell once, and that creates a very big problem because that means they're trying to predict what's going to happen. Whereas if you're actually grid trading into a position here, let's say price came up here, created a resistance level right here. Let's say that's $100, right? So now there's a resistance at $100 and you're thinking, okay, it's going to be a good short if we have like a double top up here back at $100. Price is currently at like 90 right here. So what most people would do is they FOMO short in here prior to it even getting up here because they're thinking like there's actually like a little bit of a flag here that was previous there that kind of created a little bit of a resistance right here as well. It's like, well, what if it never gets there? I want to get in now just to make sure I make money on this short because there is a little bit of a resistance patch right here that could be the top before this thing actually dumps down, which is fine, right? That's potentially a good entry because you don't know if it's going to peak there, here, or here, right? We don't know if that's going to happen. So what you need to do is, one, understand risk management and understand, okay, well, even if I'm even gonna get into this trade at all, how much of my total portfolio can I actually get in? And for me, my risk management rules are very simple. I never risk more than 1 to 2% on any trade. So for example, let's say you have 100K in account. If you're only risking 1 to 2%, that means your max loss could be $1,000 to $2,000 in losses on any given trade, right? So $2,000 is not a whole lot of money to lose. It's very, very minimal on a 100K account, right? You can manage that. If you lose $1,000 on your 100K account, you still have $99,000 left. Now you're sitting like, okay, I still got 99 grand. It's not a huge detrimental thing. The problem is most people bet so big and risk like 10 to 15 to 20 to 30% of their account. If you lose 30% of your account, the death spiral has already begun. You're not recovering from that. And what happens is most people try to recover from that by doing a revenge trade. So they bet even bigger this time to try to recover for the dumb decision they made in the first place. So never risk more than 1 to 2%. I actually don't even recommend 2%. I'm like max 1.5. Sometimes 2% if the market is hot and I'm super confident. But really a lot of times it's like I start with 0.25. 0.25%, guys. That's baby entries. So many people want to go 10%. Dumb. I start with 0.25 and I scale in. And that's what we call it grid trading. So for example, if you're looking for a short at this resistance level, you would maybe do, let's say 0.25 entry here, 0.25 entry here, 0.25 entry here, 0.25 entry here. And this way, what are we doing? We're anticipating the trap, right? Because we know there's a high probability of a trap and most people are going to enter here and get stomped out over here before the actual move comes. So the only way to combat that is to divide your entry into multiple entries, right? So 1, 2, 3, 4, potentially 0.25, 0.25, 0.25, 0.25. Your stop is up here, right? You put your stop somewhere up there. You don't know how high it's going to be above it, but you want to have a pretty big breathing room. So now you're risking in total, if you put your stop for each one of these entries at this level, you're now risking 1% in total because you entered in 0.25, 0.25, 0.25. You might only get filled on these two. And then you only have a 0.5% risk on the entire trade. These entries never made it there, okay? But if you put all your bags down here and didn't anticipate this up here, you now have a huge amount of risk up here because what if it actually does this and this keeps going? Now you're gonna have a much bigger loss because you didn't anticipate all this volatility at these highly emotional levels within the cycles of the market, and understand that you have to anticipate a trap. Anticipate a trap on every trade you make, okay? So I'm always anticipating traps. Let's just take a look at a few examples from actual alerts that were sent out to my paid private group. It used to be on Telegram. We actually just switched to Discord this week. So the actual alerts I'm gonna show you are from Telegram, but we actually just shifted towards Discord because I want to focus more on the community aspect. I feel like Discord's better for that. So let's just take a look at a few screenshots here. This one was on SPX 500 short, account risk on stop out 0.5%. So 0.5% was my first entry, short entry. I'm going to add up to 1%, up to 1.5 in total percent on this trade, up to 4,600. Here's my stop at 4,625. And I'm also going to exit this position in a grid as well, between the ranges of 4,500 to 4,300. So what I've done here by allowing myself to enter in a grid and exit in a grid is allows me to be correct in many different scenarios, right? It allows me to pick a range of where price could potentially go, as opposed to being like, price is going here, and if it doesn't get there, I'm right? Whereas with a grid, price could be like in a 200-point range to the upside that I'm a short into, and then a 200-point range to the downside that I'm going to exit between, because I don't know what's going to happen in the market, right? All I can do is look at supply and demand areas, support and resistance areas, and be like, okay, here's levels where people are probably going to react to. So let me just draw a box, a big box in those ranges that allows me a lot of wiggle room to predict that that's somewhere in the vicinity of where price is going to reverse. Okay. So that's just an example. This was the chart that was sent here with that. This is the chart that was actually sent with that, right? So one, we have the beginning of a potential downward channel here. Also the beginning of a potential descending triangle breakdown below this resistance here, right? Potentially that would be a descending triangle, which is a bearish pattern that if it breaks down, likely going to see a dip to the downside. We also have a little bit of a gap fill. So I have to anticipate price to potentially come all the way up to that level. And we have the resistance here. Now, also, we have price that could come all the way up to that high. So I'm going to anticipate potentially there could be another move all the way up there to create a double top, that I have to have a little bit of a wiggle room, but due to the fact that I'm also getting in down here, anticipating a new bearish trend to form, I don't want to have too much resistance where if we create a new all-time high, then I'm going to get totally on this position. So I'm entering small 0.5%, and I'm going to add in, potentially quarter positions, half positions up to 1.5%, as high as 46.24 here. So I'm anticipating a lot of different scenarios that could be happening here without trying to predict one entry here that's going to be what's fucking happening. I don't fucking know. Nobody fucking knows, right? So when you plan for multiple different scenarios, it allows a lot more freedom in your trading strategy, and will also reduce the amount of times you get stomped out for losses because you're not preparing for all these scenarios, as opposed to looking for potential multiple entries on this. So let's see what happened next. Price did come down after that, and then now we have confirmation that this is now a new resistance level and a descending trend that's actually forming up here across the board here, and a potential descending triangle. So after we did that, we came back down and bounced back up slightly. For me, this is looking like, okay, this could just turn into the next trend down. We're actually going to flip below the Jenner trend, of which these are my indicators. You can also purchase. We can talk about those later in another video. But as we start shifting back below bearishness onto Jenner trend, we're also forming up this new resistance. Now I'm thinking, okay, we have this level right here. I'm going to add potentially right here. I've positioned my stops now to about right here, as I don't want it to break out above this level. If that broke out above that level, that would mean structure is changing. We would break out here, break out here. That would be looking bad in the sense of being short, as if we're going to break out to the upside. So now I'm entering short again, and I want to give a little bit wiggle room. If price came back up and broke out above this descending resistance, I want to have some wiggle room for it to spike up above it and then trap and then come back down. So let's just take a look and see what happened from this point on. Now we can go back and we can see at that point, this was me getting an S&P 500 short here, and then me adding right about here. And we had those descending resistance lines drawn. We also had the horizontal support lines drawn down here. And anticipating what would happen, you can see it retested again after me shorting and adding right here. It spiked right back up into descending resistance. Actually, it held quite strong, and then it's absolutely dumped right into this level, broke that down, and came all the way back down before retesting that resistance and came all the way back down again. So took advantage of this quite nicely on this trade. We can look at the actual entries here. The replay on TradeZilla is actually pretty bad to show because I swing trade. Maybe it's good if you're looking like right afterwards on an intraday chart. These are like 1 hour charts. this is a month ago on daily, so it's not good. But you can see here's my entry 4644, and then exiting here, 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 and here. Basically between 4,500 to 4,300, that was my exit range, right? So exit between 4448 and 4343, and then things just collapse from there. So nice trade on the S&P 500. Basically just utilizing those principles, utilizing channels and traps and anticipating what could potentially happening, and also scaling into positions instead of going balls deep on your first entry. Now let's take a look at another one here, which was getting short the JPN 225 short, or getting in the JPN 225 index, short entry 33,000. I'm going to add up to 1% as high as this level, stop level 33,700. My target range is 32,850 to 30,700. So it's allowing me to enter in a grid and exit on a grid, which allows me to be much more flexible in my trading strategy and stop trying to predict what the going to happen, because that's just stupid. When you're entering in ranges, it really opens up the opportunity to have a lot more flexibility in your trading. And so you can see what we're looking at here on the actual trade is, one, we have the descending channel that's forming up here. I'm anticipating, this is the alert that I sent out, anticipating a trap. All right, I'm always anticipating some sort of trap, but I'm also anticipating that there could potentially be a trap up here. So my stop isn't at that level, it's above that level, anticipating that it could potentially come up into that level, spike up, and then come back down. So let's take a look at exactly what happened with JPN 225 after that actually happened. So we can see JPN 225, me getting short right here, right? And then anticipating that we could have a breakout to the upside above this level right here, okay? And we can see it break out above the channel here, right here, break out slightly above this level, of which I added short here. It was just on the cusp of me potentially stopping out of this. But part of me just decided and took the initiative, say, you know what, I'm going to enter short here. My stop's going to be pretty closely tight here. And if this traps and it doesn't actually close above that level, then this could see a huge downside collapse. And that's exactly what we saw here. You also have to understand, guys, that just because something is breaking out over a level, it's not a breakout unless it's a confirmed breakout holding above that level with closed candles closing above that level for at least like 24 to 48 hours, 24 to 72 hours even. A lot of times we see these intraday spikes above resistance levels, of which look dangerous in that point in time, but by the end of the day, it's now closed back below, and now we have a beautiful trap in our hands at that level. And a lot of people got scared and panicked on this intraday spike, and as opposed to potentially adding or potentially just holding on to see what would happen by the close, they all got stopped out, and then we just missed out on this huge move to the downside. And we can see me actually entering short on that spike above that trap on this trade right here, $2,000 profit. You can see the other entry here, short, 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 didn't get stopped and trapped out, exit, 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 down into the ranges on that trade. And you can see it coming all the way back down here to the downside. Now, this also works on the opposite side of that, guys, right? Right after I took advantage of the short to the downside, what do we have here? Right, we have a huge collapse into the actual channel. Draw this a little better here. Collapse into the channel support here, as well as breaking down this level. So this is also another area where you can buy the actual trap, and that's what we did here. If we look at the alerts, where are my alerts? You see alert, trade ideal long JPN 225, adding just 0.5% risk. Here's my entry, add to trade range stop, target range 30,000 to 31,750, blah, blah, blah. You can see what I'm looking at here. We got short up there and there, added 0.5% risk on the trap. That was that nice big downside move. We're now coming back into the descending support here. And also we can scale all the way back and see that we had support here, Price is panic selling into that level. I'm anticipating the potential trap below these lows here, right? I'm allowing that risk to happen because I know that it might just see a big spike to the downside to even break below these levels before coming back up and coming back up into that level. So let's just take a look and see what happened on the chart. We can see that exact thing happening here. on the chart. If we scale this all the way back, we can see the support here, price coming into that level, boom, dropping in, we're getting long here, and then we exit out of that position as we scale out to the upside. So you can see long here on JPN 225, exit, and also another position that I entered long here, exit on JPN 225. So that's basically how I've been trading mostly. It's not the only thing I trade. There's crypto is a bit different. I have a whole other entire strategy for trading small cap crypto coins that also allowed me to turn 20K into 1.7 million during the bull market. And now we're getting a lot more action again. We just had a bunch of those nice trades that formed up as well. But this is mostly just for trading US stock indexes, Forex, a lot of more ranging markets. This is a perfect strategy to be trading that. And that's kind of what I would suggest for trading when you're trading at any sort of prop firm. Now, when we're looking at any sort of trade analysis, this is TradeZilla. It's okay. One thing you have to note, if you're seeing people do this, people can delete any of these trades, guys. So it's not necessarily real. If you look at a lot of these trades, anybody can go in here and go to their trade log and just delete a trade from their stats. Okay, so I'm not doing that, but you can. So you need to be aware that TradeZilla is not 100% legit when you see other traders using it. Anybody can go into their daily journal or trade log and delete any fucking trade that they want. TradeZilla, I think this guy Umar owns it. I would recommend you disable that feature because this is all bullshit. Anybody can delete their trades and not make this fucking real. So it's important to know that. But other than that, okay application. Now, if we look at my overall stats of this account, right, I'm in a little bit of a drawdown right now from the 9K. Or from the 10K profit target, but you can see my overall net P&L risk reward is 20R. That means I'm earning 20 times more than what I've been risking compared to my losses. So I have a huge winning rate here on this account, 62% overall win rate, but my risk reward 20.42R is massive. And so that means I'm very good at finding the high probability setup and having a small loss potential compared to the amount of money that I can make. And that all has to do with understanding the cycles of support and resistance and not trading during those gray zones, which so many people do, or getting stopped out on traps because they don't anticipate the traps. So if we look at the actual dollar amount here, this is basically just me peaking out at about 10,034, and now we're in a little bit of a drawdown since then. And now I haven't had any new trades for the last couple of weeks. Well, these trades haven't panned out yet, but we already passed that level at 10,034. This is with a $100,000 account. I am, guys, taking two $1 million accounts at Hydra funding as well, meaning that earning that 10% profit or 10% in a month is $100,000. That is a shitload of money to be making if you can get access to that capital. So I'm up $35,000, which is 3.5%, compared to, making 3.5% on the 100K is only $3,500. So $1 million is quite a big difference when you actually think about it. So I'm excited to make another video once I pass the $1 million count. I was up about 6.3%, closed trades, and then we just went on a little bit of a losing streak, which is just part of the game. I got stopped out on a few of this massive spike that we just saw on the SP 500. I was short right here, got in, and then I stopped out on this breakout. Now that was a gray area for the past 2 weeks as everything just ripped to the upside. So I haven't really been trading. Now I'm just waiting for the next cycle for me to potentially come upon the next upcoming trades for this actual challenge account. But as far as the actual 10K, but as far as earning the 10% profit to pass the 100K challenge, I already did it. Took me about 2.5 months. Now you might be thinking, hey Cam, like 10 grand in like 2.5 months, it's not a lot of money to me. What the going on? But when you think about that, the challenge to take the single phase challenge is only $629, and if you could earn $10,000, that's like a 1,400% return on your initial investment. You also got to understand, guys, that you shouldn't look at trading as income, something to pay your bills. That is the dumbest thing you could possibly imagine. Whatever trader you're following out there, whether it be me or anybody else talking about they're using trading as their income, is all bullshit. Look what they're actually doing. They're either affiliated with a prop firm, a broker, selling courses, selling alerts. all things I do as well, which is not a problem. You just understand that's how we're paying our bills. That's how a lot of times we're buying different things, okay? Trading is a way to grow your wealth. I've done a bunch of different stuff with my trading income. That's how I actually built and paid for this house. I took a bunch of my money from my $20K to $1.7 million that I made in the 2021 bull market, then $500K I made in the bear market. A lot of that went towards building this brand new villa that I just bought here in Bali because I use money to buy the land and also fund the project. But I also have a lot of money in income from my services that I sell. Obviously, the courses, the alerts, now the hydra funding prop firm. You have to understand that trading should never be looked at as something that you're going to use for your income to pay your bills. Because as soon as that happens, and as soon as you go through a slow month like November has been for me, all of a sudden you don't have any money to pay your bills. Now you're going to force trades and make a bunch of stupid decisions, which are going to accelerate your failure because you're now trading out of emotion and necessity for your survival, as opposed to, okay, I can just relax and try to really focus on growing my account. Another thing, if you're continually pulling money out of your account, how are you supposed to use exponential growth in your account? If you really want to build wealth and build a wealthy future for yourself, you must leverage the profits you have to then keep it in your account, because now your account balance is big. And now you use your risk management of your 1% risk on every trade continually gets bigger because your account balance is growing, right? If you continually pull money out to go pay for bills and whatever bullshit you're trying to buy, you're going to limit the amount of exponential growth you can have in your account. So anyways, guys, let's just sum this up. First of all, you need a high probability trading strategy to identify setups that are actually going to make you money and give you a solid risk reward setup. Secondly, you must understand deep insights into risk management. And that is, for me, very simple, never risking more than 1 to 2% on any given trade. Thirdly, you just need a broker that provides you with what you need, and potentially hydra funding could be for you. There's a lot of other prop firms out there, so go and do your research and find out what you think would work best for you. But if you're interested in hydra funding, there is going to be a link below that you can get started. And if you want to get more about my strategy in trading, I just so happen to have released a brand new book called The Wolf Principles, which is going to teach you exactly the principles of how to become a millionaire trading crypto, Forex, and stocks. If you don't know, I've been doing this for 20 years. I've been doing it for quite a long fucking time. I'm about to turn 40 years old, and I started when I was 20 years old, a long fucking time ago. So my brand new book is out if you want to go check that out. It's absolutely free with just a small little processing fee. But anyways, guys, I hope you enjoyed this new video that just came out. I have a lot more stuff coming. Again, I'm also taking 2 $1 million challenges at hydra funding. That's all being documented and showcased. And there will soon be a video for that as well. But anyways, like, comment, subscribe, and let me know in the comments what you thought of this video. Anyways, thanks for tuning in. I'll see you guys in the next one.